We'll start with you, April.
My name is April Gutierrez. I'm a licensed tax consultant and an enrolled agent. I own Pacific Northwest Tax Service with my husband, Jess Gutierrez. And this is my son, Austin Gutierrez. He is also a licensed tax consultant and an enrolled agent and a PSU accounting major, set to become a CPA in the next 3 years or so.
Excellent. We got the mother-son experts in the house. Appreciate you taking the time to do this. What are your initial takeaways on this story about the president's tax returns, and what's really the big picture about his situation or the tax system in general?
It wasn't terribly surprising. We've heard for a long time that Trump may not be making as much money as he says he's making, and those tax returns certainly hold to what some of those rumors have been. It's not at all hard to generate a tax return that can say anything you want it to say. So when I read the New York Times article talking about what they're seeing on Trump's tax returns, that he's making hundreds of millions of dollars off of The Apprentice and off of licensing the rights to use his names on buildings, that all of that income, those hundreds of millions of dollars of income, are being offset by losses on all of his real estate holdings, his hotels, and his golf course, particularly the golf courses and resorts that he operates. So when I look at that, I'm seeing he has all of this income on one side being offset by huge losses on the other side.
For instance, in 2018, his financial disclosure stated that the revenues were $435 million, but the bottom line for the profit margin was $47.4 million in losses in the business. You have millions, hundreds of millions of dollars. A company is probably worth more than $1 billion, but it's generating significant losses year to year.
Everyone's asking, how can someone who makes a lot of money pay no federal income taxes for about 10 out of the last 15 years? How does that work exactly? And is that something that someone with an average income could do?
That would be extremely difficult for someone with your average income to do. Most taxpayers earn money from their jobs, the retirement accounts, and investments. And when you have an employer, when you have a retirement account, when you have an investment account, the income from these accounts is directly reported to the IRS. The IRS already knows how much you're making from these sources. So how do you offset that income? Well, the average person has very few ways that they could offset that income. They might file a Schedule C, and on the Schedule C, they could claim a bunch of business losses. But IRS is going to zero in on a Schedule C pretty darn quickly. They're a high target for audits. And if you're doing anything on your Schedule C on a routine basis, year after year after year, which is what we're seeing with Trump's returns, year after year after year of losses, well, the first thing comes to mind is, what are you living on? I mean, if you're filing a tax return that says you have no money, what are you living on? These are very basic questions that the IRS asks anytime it's looking at a return and deciding to do an audit. They look at something called the lifestyle audit. There is this type of audit that the IRS does, where if you're claiming these really big deductions for home mortgage interest, but you're not reporting corresponding amounts of income, the obvious question is, well, how do you pay those expenses without the income? Where is the money? And that's what an audit is doing, is looking for that money. A typical taxpayer might get away with claiming losses on a Schedule C that offset all other forms of income they have for the year to bring their income down to zero. And they might get away with it 1 year, 2 years, but by year number 3, they've been checked out of the IRS database computers, and they've ended up on an IRS examiner's desk, and that IRS examiner is going to look at that, and they're going to go, yep, we're going to take a look at this one. And then they send out the letter saying you're under audit. And then you get to the point in time where the audit is occurring, and in that audit, you're going to have to justify and show that A, you have a legitimate business, B, you had the resources to pay the expenses that you paid, and C, that the expenses that you paid are allowable business deductions and not some other kind of expense that wouldn't be allowable. For example, we're not allowed to deduct the cost of personal trips to visit our own golf courses. We're not allowed to deduct the cost of our hairdressers or our business clothes. So those types of deductions, if they're claimed on a tax return, they're automatically thrown out.
When we're talking about deductions, the president listed a lot of different ones. Is that easy to do for the rest of us?
No. it's not easy to do for the rest of us. For the first reason I already said is you have to have a type of form that even allows you to claim the deductions. Schedule C is the small business profit and loss that an individual can attach to the return. And it is, you can use expenses claimed on Schedule C to generate a loss and then use that to offset other income on your return. But if you're not filing a Schedule C, it would be really hard to do that. You might say that, oh, I have another business. I have this S corporation that is a company that I own, and I'm paying expenses through this company, and they're more than the income, so it lost all of this money, and I'm going to flow that loss over to my return and claim those losses. There's things like that that individuals can do. The question is, will they get away with it? And the answer is not for very long. Now, the typical tax payer is reporting income on a W-2. And if they're reporting income on a W-2, they're not going to be allowed to offset wage expenses that they might have because Congress took those deductions away.
You know, 1040 tax return for individuals is very hard to claim any deduction, but on business return like 1120, 1120S or Form 1065, you can put whatever deduction essentially you want on it, as long as you can back it up. There's a rule in tax law that an expenditure in business must be ordinary and necessary for that operation of the business for a profit motive. So Trump has two properties, Mar-a-Lago, which is his personal permanent residence now, and Seven Springs. Those properties appear to have a clear personal purpose, and based on the New York Times article, he should not be taking business deductions for using those properties. For instance, at Mar-a-Lago, he took deductions of $109,000 for linens and silver, and then $197,000 for landscaping, and then you pay $210,000 to a Florida photographer. Now, that was operations of a business. Let's say those activities generated him $1 million, then he might be able to argue that's a legitimate business purpose. However, based on the New York Times article, we're not seeing any revenues come in to pay for those expenditures to generate that profit.
So an individual person with a wage job would not be able to claim those types of deductions. In fact, Congress took away the ability of wage earners to deduct expenses of any kind to offset their wage income. It used to be that an employee could deduct unreimbursed employee business expenses on Form 2106. And on Form 2106, for example, if you were in sales, you might deduct your car expenses and supplies that you bought and the cell phone bills that you paid and any other expenses that you incurred that were ordinary and necessary to fulfill your role as an employee and for which your employer has a policy that they don't reimburse you. Those were taken away. So now an individual who works on a wage job and incurs all of those same expenses as ordinary and necessary expenses of earning their wage living is not allowed to deduct a dime of it.
So I know that we've not seen the president's tax returns for those years since that changed, but is that something that he could still apply for?
Well, because he's not filing as a wage earner, he's filing as a business owner, he is able to continue taking those deductions. Back when the Republicans held both the Senate and the House, and the Tax Cuts and Jobs Act of 2017 was hotly debated and all over the news, there was a lot of different news clippings of Democrats saying, so are teachers, are school teachers and salespeople going to be allowed to take these deductions? And the answers were, of course, well, no, they're not. They were pointing out that individual wage earners were going to lose the ability to offset their business expenses, whereas corporations were going to get a big tax cut. So corporations continue to be allowed to claim all of their ordinary and necessary business expenses. There's really been no change there. I could get into technical details where there are some changes, but we'll save that. For the most part, these corporations continue to deduct things as they always have. And in addition, when they do figure their taxable income, their tax rate is lower than it used to be because the Tax Cuts and Jobs Act reduced those taxes.
All right, so I know it's hard for a story like this one not to be political. People will think of it what they will, depending on where they fall on the political spectrum, possibly. But what are some of the broader lessons that could help people watching this all play out when it comes to our tax system?
When you're looking at this news story on Trump's tax return, the first thing that we have to do is say, well, is this a true story? Is this a legitimate reporting of Trump's actual tax returns, or is it fake news? I think it's probably legitimate. What my takeaway is when I look at that story is clearly we have a situation where Trump either isn't making all of the money that he claims he isn't the successful businessman that he says he is, or he's a tax cheat. It's one or the other, and it's probably both. That's my take on it.
Like, this tax story also points to the larger picture of U.S. tax law. You have someone like Trump who lives a pretty wealthy lifestyle. However, the New York Times reporting on his tax returns reflects that he pays minimal taxes. For the average wage earner, let's say you're earning $50,000, $60,000 a year, they're going to be paying more than $750 in federal income tax, most likely. So the question, to Americans is, do you think that's fair? Average working people pay more than Trump did in federal income tax.
So we've heard some of the things that we can't do as average wage earners compared to maybe the president or a business owner or someone who makes millions of dollars or has those millions of dollars worth of assets. What are maybe some things that a lot of everyday people are missing out on in our tax system? Are there any quick takeaways of, hey, I should do better next time I file?
The whole point of the Tax Cuts and Jobs Act of 2017 was to virtually eliminate deductions for most people. The standard deduction was doubled. The personal exemption was taken away. And so it became much more difficult to itemize your deductions and claim expenses in the first place. In the second place, there's very few deductions that are allowed anymore. No business expenses of any kind are allowed by an individual who doesn't own a business. And so you're left with mortgage interest and real estate taxes, gifts to charity. If you live in an area that has been declared a federal disaster area, you may be allowed to claim your casualty losses, but there's a huge limit on that. They have to exceed 10% of your income after insurance payouts. And there are some miscellaneous deductions that some folks are still allowed to claim. One of the ones that I found rather interesting is the gambling losses to the extent of gambling winnings. And one thing the Tax Cuts and Jobs Act of 2017 did include was a new provision that allows people to deduct their travel expenses to and from the casino, as well as the cost of staying at the casino. Previously, you were only allowed to deduct your gambling losses equal to your gambling income. Now, in addition to those gambling losses, you are allowed to deduct the travel and lodging expenses of going to the gambling, the place that you gamble. But only up to your income. So if you win $1,000, you're allowed a maximum of $1,000 of expenses. That's still allowed, but you wouldn't be allowed to claim $10,000 of gambling losses against $1,000 of gambling winning.
What's the deal with the audit the president's going through?
Well, Trump has claimed from the beginning that he wasn't allowed, or not what isn't allowed, he couldn't release his tax returns because they were under audit. And being audited has no impact at all on whether or not you can release your tax returns. He could release his tax returns and say, well, they are under audit. IRS is challenging a number of items, but this is how they were filed. Or he could work on the presumption that he's going to lose and amend the returns to show the numbers that the IRS is arguing he should have put on there. But he could release something. I personally think he should release what he filed. And if IRS later changes that, then he could publish his amended returns. Now, most politicians who are going to be running for president are probably going to do a very good job of making sure that their tax return can withstand an audit, and their tax return could be relied upon to be reasonably accurate. Trump's tax return, I suspect, is not accurate, and therefore, after the audit is concluded, there probably will be substantial changes.
So the issue with the audit is in 2010, for his 2009 tax return, so he claimed a tax refund of $72.9 million, which include federal tax he paid from 2005 2008 plus accumulated interest. There's a provision under the 2009 tax bill that allowed business owners to request refunds for taxes paid in prior years against losses due to the Great Recession. So the issue being disputed by the IRS is he wrote off a $700 million loss due to his Atlantic State Casino. Essentially, he abandoned it. However, the report, the tax experts believe that he probably walked away with claim a $700 million loss. That would be a capital loss, not a business loss that you could write off in 1 year. So that would make it an illegal deduction. So you would be required to pay back the entire $73 million refund. And the article is estimating there's about $100 million worth of penalties on top of that.
That's a very real truth, that if you lose $700,000 or $700 million in stock that you hold, you're buying and selling stock on the stock market, your losses are only allowed to be $3,000 a year, and any loss above that has to carry forward each year. So to claim the full $700 million would in most cases be completely inappropriate.
Well, I know this is complicated and there's so much that we could talk about for hours and hours, I'm sure. But is there anything else I missed or anything else you'd like to add?
You asked again what the broader lessons are for people, and I already commented on this, that, from the beginning, Trump has not wanted to release his tax return, and there's been a lot of speculation about why that is. I'm on Facebook. I read what people say from the left and from the right. And many people on the right argue that his tax returns are not relevant and who cares? It doesn't matter what they say. Speaking as a tax professional, I believe that tax returns are extremely relevant. You know a lot about a person by what they're putting on their tax return, and you can gauge the integrity and honesty of a person by how they file. This is just my personal observation. I've been doing taxes for 28 years. I have my clients sitting across the desk from me. I'm interviewing them. And if they're open and honest about their tax situation and doing the best they can to comply with tax laws, as a tax professional, I am happy to work with them, happy to serve them, happy to have a long-term customer relationship with them. If I perceive that they don't want to follow the law, that they are looking for ways to break the law with their tax return, I will inform them that what they're doing is illegal and not allowed. And if they follow my advice and say, oh, well, then take that off, then I continue that relationship. But if they persist in wanting to claim deductions after I've told them that they're not allowed, or if they say they don't want to report income that they earned because they don't want to pay tax on it, then I say I can't help them. Ethically, as a tax professional, it would be illegal for me to take their business and to prepare their tax return knowing it was false. So there's two sides to all of this. There is the actual physical preparation of the returns themselves and how legitimately that was done. You've got the firm preparing it and whether the firm did an accurate job of those returns or knowingly or unknowingly filed tax returns that are false. And then you've got Trump himself saying, that his tax returns can't be released because he's under audit. The whole picture for me as a tax professional is the more the tax return is hidden, the more curious I am about it. And it's great to see all of this finally come out.
A couple things I want to comment on. Trump has, claimed himself to be a successful businessman. However, how would he exactly be successful, if most of his business ventures have negative cash flow, where he has to take out loans to finance his businesses because they continue to lose money and not generate a profit for him. And that's what these tax returns explain.
The places where Trump made money were from The Apprentice, which was clearly very successful for him. He made a lot of money at it, and from the rights to his Trump name, his brand. So he was receiving direct payments for profits from The Apprentice and direct payments for his brand, neither of which require business acumen. He has made, if he has any business talent that I'm clearly seeing, it's promoting his brand and making people believe that there's value in his brand, and he's getting a lot of money from that branding. So he's good at branding. But when it comes to actually running a profitable business venture like a resort, he's losing money. And they're really two different things. Making money being a star on a television show is an extremely different thing than making money running a resort. One is a business, one is performing personal services. So when it comes to The Apprentice, he's appearing as a star. He may be involved to some extent in the production and the ideas, but he's being paid for his personal services. And on the other side, we have these businesses where he is hiring people, he's investing money, he's spending money, and things aren't so good on that side. The actual operational side of a business doesn't look very good for him. The side of the business where he's performing looks very good. He's good at making money from his performance.
So one argument that I've seen on social media is that some of these details in the New York Times article are not complete. We haven't seen the entire form. We don't know all of the information behind why the taxes may have been filed the way they were. What information do you think would make that more complete?
Well, what we're seeing people saying is they haven't seen the actual forms, and the New York Times has said, well, we can't release those forms because in doing so, it would be apparent who our source is. So they're protecting their source. Absolutely, I would love to see the tax forms. I love looking at tax forms. I can burrow into a form and read all the lines and understand every little line and what it means. They're terrific. But I also understand the broader analysis that the Times has given, and I understand some of the analysis they say that went on. For example, Ivanka Trump had to release her tax returns, and on those returns, she showed a certain amount of income coming from consulting fees. And the Times has said that they've been able to verify the authenticity of the records they have because they can see corresponding amounts going out of the Trump businesses that exactly match the amount that Ivanka reported as consulting fees. So the Times is saying Ivanka filed a return, and on the return she showed consulting income. You go over to the Trump documents that they have, and they show consulting fees going out off of one of his businesses, and they're an exact match to the income she says she made.
Let's talk about that real quick, since it is mentioned in the article. This is a common item that Trump has done on his tax returns is write off unexplained consulting fees. And one of them is he paid Ivanka Trump, and that line amount for 2017 appears to be $747,622. For my tax opinion, it appears that she was performing services, for the Trump organization. I think she probably should be W-2'd for those consulting fees. She seems to be more of an employee working full time for the Trump organization rather than a freelancer who consults for many different businesses.
And that is one of the things IRS does audit. If a business if you are performing services for a business and you're doing so as an officer of that business or as an owner of that business, the law says you are automatically an employee. So to make the claim that you're both an employee and an independent contractor at the same time, that would be scrutinized and be probably disallowed. IRS would burrow into that right away. So to say that she received all of these consulting fees, I think, well, it seems to me that should have been wage income. It should have been subjected to Social Security and Medicare taxes. But B, I'm also wondering, are those legitimate payments for anything she really did? Because if they're just a way of transferring money from Trump organization to Ivanka, or from Donald Trump himself to his daughter Ivanka, then I get thinking about the tax laws around gifts and inheritances. And wealthy people pay lots of money to experts to figure out ways of moving their money around to avoid paying these estate taxes and these gift taxes. So I look at that and I think either it's payroll tax evasion or it's estate and gift tax evasion. That's what I think.
Is that legal to get around the estate tax and what you were just talking about?
There are tax professionals out there, I'll put it this way, there are tax professionals out there who make it their business to help rich, wealthy people move money around and avoid these taxes. It's not my specialty, and it is an area that is, of course, closely watched and monitored. And you would really need to get into some kind of specialized family and estate attorney to get real information on that. But my inclination is that it's probably not allowed in the way that they've done it. If it was done accurately, it would probably be done through some type of trust arrangement, a whole other ballgame.
When it comes to cash flow, Trump claims to say, I love depreciation. The New York Times said he said that during the 2016 presidential debate. Essentially, depreciation is expensing of a capital asset like a building or a piece of equipment intended to generate revenue or income for that business venture. So what Trump is saying here in the article that, my financial records show that the profit is far lower than it should be because I'm claiming all these depreciation deductions, which is not a cash flow item for that financial record. When the assets originally purchased, you finance it or you pay out with cash to purchase that building or purchase that piece of equipment. So that's cash out. And that when you're actually expensing for depreciation purposes, that's not a cash point for the financial record, but it's still cash flow out. Nevertheless, he's still sending money out or borrowing money to pay for those assets. So his cash flow is negative.
Bottom line, he's spending more than he's making per the tax returns. And no business owner would consider their business to be doing well if they're spending more than they're making. A business owner naturally wants to minimize expenses, maximize revenue, and maximize profits. And losing money year after year after year, that is not sustainable for 99.999% of business owners.